Good afternoon. Good afternoon, everyone. So it's Monday, the 6th of October. I'm Tilan Vikramasinghe. Wow, what a amazing Formula One season it was last night. We saw the win for Mercedes. Also, Asian markets are up with expectations of a new prime minister loosening monetary policy in Singapore. In Japan, sorry. And Bitcoin is up, and AI theme is still playing with expectations of the Fed policy cuts coming through. Now, actually watching last night's F1 performance actually kind of reminded me of how much this sport actually uses data, analytics and AI as much as speed and as well as the drivers. So today, I really want to kind of focus a little bit more on technology and what technology opportunities are there in investing in Singapore. So we're going to start with regional internet analyst Husseini, who's going to be highlighting a new AI technology, agentic commerce. What is it? And how will that impact overall internet companies and specifically Sea Limited? Next, we'll look at Malaysian digital banks and how they're faring, and how Singapore banks are using AI and what that means to ROEs going forward. Then we move on to Jarek, who's back from a site visit from one of his high conviction picks, Sanli Environment, and we're going to hear from him. And then Krishna has just upgraded LREIT to a buy. We'll ask why that is. Plus, we got our two trading buys as well. But let's start with Husseini. And Husseini, welcome to the show. You're highlighting this emerging technology called agentic commerce. What is it?
Yeah, sure. Thanks, Ilan, for having me. See, it's a new way to shop where AI like ChatGPT helps users discover, decide, and buy directly within chat itself. Payments and orders happen seamlessly without users needs to leaving the conversation. Okay, while fulfillment is done by the merchants. Over time, this can evolve in different formats. First is that either through platforms like Shopee or Shopify partnering with ChatGPT or similar AI platforms. Alternatively, merchants could sell directly to users through AI, and that way completely bypassing traditional e-commerce platforms like Shopify, Lazada, or Shopee. So those two alternatives could emerge, but net it is a way where you use ChatGPT or similar AI platforms to directly shop rather than going to those platforms like Shopee or Lazada or Shopify.
No, that actually kind of worrying, isn't it? I mean, you've got AI and ChatGPT completely bypassing these e-commerce platforms. So from that angle, what's the threat? And also, is there an opportunity?
Yeah, both. I would say it's both a threat and an opportunity. So, from the threat point of view, it could become an alternative distribution channel that pressures small platforms. Simply put, I can ask ChatGPT to maybe buy me a T-shirt rather than going to Shopee or Lazada. But this is a threat, right? I don't need to go to Shopee or Lazada. I just ask ChatGPT. But it's also an opportunity wherein AI can drive more traffic and conversations. Much like, say, right now, what happens is that if I were to buy a T-shirt, I go to Google, I type that buy me a T-shirt, and that directs me to Shopee or Lazada. So ChatGPT in turn can also be an alternative platform which helps me to, or which helps to diversify to do or to direct traffic to these platforms. So it could be an alternative traffic generator. In our view, larger players with strong social media, with strong logistics and seller networks are better positioned and could even launch their own AI agentic platforms. So it could be both an opportunity as well as a threat.
Now let's actually drill down to the main e-commerce platform in Southeast Asia, which is Sea Limited, and which we have a very strong buy on. How will agentic AI and agentic commerce impact this stock?
Um, See, in our view, it is likely to be very limited in the near term. And because simply put, agentic commerce is still nascent. And Shopee's strong logistics and seller infrastructure give it a solid moat in the e-commerce ecosystem. And that, in our view, is very difficult to replicate. So it again means it is in a very nascent stage, and near term, the impact is likely to be limited. We maintain our buy on C Limited, which owns Shopee, as we see the overall company is fighting on multiple cylinders. But that said, we'll keep a close eye on the developments in the agentic commerce space, and we'll keep keep our audience and investors updated accordingly.
You're still keeping a buy on Singtel despite all the issues that we've had with Optus with 2 outages in September. So very quickly, why is that?
Yes. So yeah, we are keeping our buy on Singtel. And the key thing is that first of all, the Optus incident itself, and if we go into the past of what had happened, because in the past there were also multiple outages at Optus. Overall, the penalty which was imposed on Optus was limited. For the last outage in 2023, the penalty was at just $12 million. Also, the impact on the operations and subscriber churn and things like that were very, very limited. So if we take the past as a past precedent, the impact was limited. And the second important factor is that Optus is overall around 15% of our SOTP and only contributes less than 5% of the earnings. So even in a worst case scenario, assuming that the revenues declines by 5%, they have to raise the capex, their margins remains at where it is right now, still the impact in it, and that's a worst case scenario, still the impact in our view is likely to be just negative 5% on the overall earnings of the company, given that the Singtel is such a diversified group. So even in a worst case scenario, the impact is likely to be limited. The past precedent suggests that the penalties or the impact on the subscriber churns is also limited. And finally, why we keep our buy is also the fact that there are multiple catalysts which in our view is not fully appreciated. One of them is the data center and AI related initiatives which the company is taking. And the second is that its various associates appears to be in a very strong position, especially the Indonesia one, where we see the turnaround. So in the Indonesia, Telkomsel had been facing quite a bit of competitive challenges, but in the last 3 or 4 months, the competition has started to improve with price increases. So those are the catalysts, which is data center and AI, as well as the improvement for its associates, especially Telkomsel in Indonesia.
Got it. Thanks, Hussaini. Now let's move on to digital banks in Malaysia. Desmond Ching there has done a stock take of how the digital banks are faring there. Bank Negara gave out 5 digital banking licenses, and that allowed new entrants to come in: GX Bank, Boost Bank, C Bank Malaysia, Aeon Bank, and CAF Digital Bank. These players have all, launched very ambitious goals to drive financial inclusion and reach underserved segments. Now, here's a reality though. The digital banks remain in the very early stages of their life cycle. Scale is small, costs are high, and they're all currently loss-making. Most are still building their client bases and infrastructure. Revenue generation is limited, as products like deposits and microloans are offered at low or even zero fees to attract users. Marketing and technology investments remain heavy, and break even is still quite a few years away. Let's take GX Bank for an example, which was the first to go live. It's rapidly onboarding customers through the Grab and Singtel ecosystems, but user acquisition costs are actually still pretty high, which is quite surprising for a digital bank. Boost Bank, backed by Axiata and RHB, is targeting micro SMEs, yet margins there also remain pretty thin. C Bank and Aeon Bank are also prioritizing growth over profitability, using ecosystem features to capture wallet share. The conventional banks, on the meanwhile, are actually stepping up pretty fast as well. So we've got CIMB, RHB, and even our own Maybank. They've all accelerated their own digitization efforts, rolling out enhanced apps, AI-driven services, and online lending to defend market share. The line between digital and traditional are already kind of starting to blur. So while digital banks are grabbing headlines, I think the key takeaway is that don't actually forget the conventional banks. They're quite, they're putting up a fight, and they're quite well positioned because they've already got pretty strong customer bases. So so we are still quite positive on the conventional banks right now. So our top picks there are Hong Leong Bank, AMMB Public Bank, and Hong Leong Financial Group. Now, if I take a page and go to Singapore, we've actually seen the conventional banks digitizing really, really fast. All three banks, DBS, OCBC, UOB, have their own AI GPT versions running internally. And that's actually being embedded on a day-to-day basis in terms of their core operating activities as well. So that's actually increasing efficiencies. And we think that cost-to-income ratios for the Singapore banks have already peaked. So you're going to see cost-to-income ratios starting to come down, which means their return on equity will start to expand over the next few years. And I think out of the three banks, DBS will benefit the most, given the fact that they have been deploying their technology faster and earlier, and we have a buy on this stock. So there's a lot more in our newsletter today. So do have a look at that. With that, let's go to Jarek, who's just back from a roadshow with Sanli's management team. Jarek, welcome to the show. What are the highlights of your recent roadshow?
Hi, Dylan. Thanks for having me. So basically, I think we brought Sanli to KL and made a few funds, and I think overall it was quite positive. Basically, I think management has been quite bullish as well. They shared that they are working on a tender book of about 600 to 800 million, and they expect some of these to come to fruition by November. So I think that's just 1 month away. But for us, we're expecting about 200 to 300 million of projects to be won by the end of November. So their current order book is about 333 million. With that, it could potentially about double their order book for the next few years. And if you look at their yearly revenue, it's only about 180 to 200 million. So this order book could last them for the next easily 2 years without them winning any more new projects. Then management also shared that they'll be tendering for more PUB projects in the upcoming 1 or 2 months for some new water plant, and that could add on to his tender book going forward. But how they tender will also depend on how many projects they win in November. So if they win quite a sizable amount in November, they might actually tender not so aggressively because their order book is very full. So all things look quite good for Sanli, and I think that management is quite positive on the outlook ahead for Sanli as well.
Now, this is one of your conviction buys, right? So what are some of the growth drivers for the company going forward? And what is the justification for such a strong buy call?
Sure. So I mean, if you look at valuations, they are trading at probably about 12 to 13 times this year, and forward, I think below 10 times PE. And I think that if you look at the tender book and order book, I mean, this company is on the verge of a breakout in terms of numbers. Why I say that is because for the last 2 or 3 years, they have been actually trying to grow their middle office, back office, and project managers to make sure that they are able to handle larger projects. And that is why their tendering hasn't been as aggressive, while competitors have been building up their order book to above 500 million to 1 B, across 3 of their competitors in the PUB space. But for Sanli, they were not actually tendering much because they were building up their middle office and back office. So that is already done. So now you can see that they're actually tendering more aggressively. And their order book has never crossed 330 million before or 350 million before. And this is the first time, their tender book has crossed this amount. I mean, their order book has crossed this amount. And their tender book is actually more than double of his order book. So if they actually win a big size, I mean, a good portion of his tender book, that could result in their order book going to, way higher levels than, what they traditionally have actually encountered before. Like, for example, they just win 300 and double their order book. That is more than whatever the order book they have got, in the history of the company. So we think that revenues and profit could potentially go up to way higher levels, than before historically. And if they actually win all these projects, that's why we think this company is on the verge of breakout earnings, and their valuations could substantially decrease in the next 2 or 3 years, especially if they win this this few hundred million orders by November, which will be actually a big catalyst for the company. And that's why we have a strong buy for the company as well. And also, if you look at basically from this year to 2028, I think there will be a lot of PUB tenders for water treatment plants and so on. And 2029, you have these Long Island tenders will start to come through. That project is estimated to worth about 100 billion Sing dollars over the next 5 to 10 years from 2030 onwards. So they have another leap way of growth from 2030 onwards, which is the Long Island project, along with the PUB projects. So we think that the company has a multi-year growth story ahead, and that's why we have a strong conviction buy on the company.
Got it. So record order books, earnings growing very rapidly, which will actually bring down valuations, plus multi-year growth drivers as well. So do have a look at Sanli's detailed note in our newsletter today. Thanks, Derek.
Thanks, Dylan.
Before we go to Krishna, let's just quickly jump into what our chart guy has to say. He's got two trading buys today. First is NANOFILM. With the RSI climbing back above the 50 level, the recent consolidation appears to be a precursor for higher low structure, signaling a potential continuation of its broader uptrend. So do have a look at NANOFILM's chart there. And then we also have MONEYMAX Financial Services. The 21-day EMA has started to slope upward again, indicating strengthening bullish momentum and a potential resumption of a broader uptrend. So do have a look at that as well on MONEYMAX. With that, let's go into Lendlease Global Commercial Trust. We've got Krishna joining us for that. Krishna, you've upgraded the stock to a buy. What are the company-specific drivers you're seeing here for this buy call?
Thank you, Tilan. Thank you for having me once again. So few drivers. First of all, we have the resilient retail sales. So if you see the data that has been recently released, over the last 2 months, island-wide retail sales have rebounded mid-single digit. The tourist arrivals are also up by a similar amount. So this, in my view, should help the operating metrics of Lendlease REIT because about more than 80% of the gross rental are coming from the Singapore malls. The second point is that Lendlease REIT is actively focused on capital management. Recently, it has proposed the divestment of an office asset in a suburban location in Singapore. So this is expected to lower the gearing on a pro forma basis and create room for future growth opportunities. Finally, the falling interest rate will help Lendlease REIT to lower interest expense, which should flow through to the distribution and overall compress the cost of capital. So I think these three specific company drivers are driving the recent upgrade.
Okay. I mean, you actually mentioned falling interest rates, right? So, I mean, when you think about the overall macro trends and interest rates coming off quite rapidly as well, how is that kind of feeding into your overall view on the REIT sector right now?
Right. So these are very important macro drivers in my view. So as I mentioned, the lower interest rate that should help to lower the interest expense and which should flow through to the distribution. Further, we also have falling 10-year yields, which helps to lift the fair value of Lendlease REIT and as well as for the overall Singapore REIT sector. So both these factors, in my view, should lower the cost of capital, which should enable accretive transactions, which were previously not possible. Finally, the safe haven flows. This may rotate into the yield proxies like Lendlease REIT. Given that other instruments like T-bills and all are offering much lower yield at the current moment. So yes, I think the macro factors do influence positively the flows as well as the fundamentals.
So we're overweight on the Singapore REIT sector right now, especially as interest rates come off. With that, I just want to quickly highlight some upcoming events. Data releases, we've got the GDP growth rate, quite important, out on the 14th of October for Singapore. We got the Nordex number, which we're keeping a very close eye on, out on the 17th of October, particularly to get some idea on how all this trade war is panning out. And then it's results season. We got the REITs, as we said, Krishna just spoke about them. They start reporting with Mapletree Pan Asia Commercial Trust starting on the 22nd. Followed by Fraser's Centrepoint Trust on the 23rd, coming out as well. So we'll have all those details as those reports come out and those results come out for you in the show, as well as our research as well. That's all the time we have today. Thank you so much for joining us. Have a profitable trading week, and we'll see you next week.